are you comfortable with these valuations? But more importantly, how long will India be the cleanest shirt in the global laundry? We've had this 35% rise in Sensex and Nifty and this $30 billion come also because others have done a damn bad job of their own economies or their polities. I mean, do we continue to be the best shirt in 2015 as well?
I think, so from a growth perspective, we will continue to grow. I am not as constructive on earnings because I think that 56%, the market is not a true representation of our economy. 56% of Nifty revenues are in dollars.
56%
of Nifty revenues are in dollars, which means that they are linked to what is happening
US economy
globally,
or elsewhere.
And of the remaining 44%, which remains, which is in rupees, a lot comes from banks who have lent money to these companies.
Okay.
So if you see a steel company blowing up, you will see that effect in the bank's earnings, right? So I'm not as constructive on a 20% earnings growth anytime in the next 2-3 years. But I do think that the PE multiples will support us. See, right now,
why so?
Almost 2/3 of the world economy has 0% interest rate. And more than 45% is actively printing money.
Yes.
In the last 5 months, China has printed $250 billion, which at the peak of the US Fed QE was 3 months of QE. Right? And China is after 60% of the nominal US economy. Japan is doing QE. The Europeans are going to do QE. Economies that were considered to be bankrupt 3 years back have bond yields, 10-year bond yields at 300-year lows, right, or 200-year lows. So I think the world is desperate for growth. India provides that growth. I am far more constructive on the PE multiples holding up or even marginally going up from here. In order to deliver maybe a 20-25% return, maybe a 30% return over the next 2 years. All of that coming from 10-12% earnings growth, which is what we've been delivering, and a marginal expansion in the PE multiple.
But since you have spoken about 56% of Nifty being really dollar denominated or blessed with dollar earnings, what would you invest in?
So I think there are still companies that will deliver 20% earnings growth over the next 3 years CAGR, still trading at valuations which may be high compared to their past trends, but given what's happening globally, I think the market will be willing to pay for that. I won't be squeamish about valuations right now, given what's happening in the world. If the world is worried about deflation, they're going to just throw money at it. And then all that money is going to go and stick at anything that delivers earnings growth. So anything that delivers more than 15% earnings growth, I would be a buyer of.
Okay. And you don't think that the dollar earning sectors are the better sectors?
Not necessarily. I mean, I do think that we have overweight on pharma, and I've been a pharma analyst, and 4 years back I used to say it's a 10-year story. There's still 5 years left, maybe more. I still like it. There are times when a pharma stock can give you 3 years of return in 1 year, and for 2 years it'll tread water. So there's some stocks like that as well. There are some stocks which are exposed to emerging markets, like Russia or Brazil or Venezuela,
which should be avoided.
Where you will see earnings cut, so the news flow momentum would be as positive. But yeah, I mean, I think that as a sector is a good area to look at. IT, there are some stocks that I still like. Consumption, I'm still constructive on. I think it will still surprise. I am again not very positive on the investment cycle reviving anytime soon.
Ridham, since you spoke about 2500 as your F17 earnings, what's your Sensex target for F70 and work backwards?
No. Our published forecast is for December 15, which is 32,500.
But that's modest, isn't it?
Yeah.
Going by the kind of earnings growth you have.
It has to be seen in the context of what we expect global equity returns to be. So it's not in vacuum, right? Okay. So it's going to be quite much more than what we think the SPX is going up or what the Euro index or probably in line with what the topics will do. But it has to be seen in that context.
But you would bet that another 15% growth in F16 also cannot be doubted?
No, I think that can happen. Our bull case is a much bigger return.
Which is?
And I'm attaching a 40% probability to the bull case. So then we are talking 40,000 index and we're talking
Which
much
index?
Sensex. No, for 1 year you're asking, right?
Okay, what would you ride on? Would you touch some of the infra stocks which are stuck? Would you, touch public sector banks which are saddled with these kinds of loans?
See, thematically, I think you want to buy 3 sectors in India. You want to buy financial services, consumption, Okay, and then a bit of the new stuff that's going to happen, which
The
will
new
come
stuff is the digital?
which will come out of reforms like GST. So GST will have a meaningful impact on, say, logistics. Okay, or digital may have a big impact on logistics. Okay, so the front end is not available to buy.
If I were to ask you the same question I asked Rakesh, what is the the new theme of from now to the next 5-6 years? Would you say it could be logistics because GST could make it?
My answer is the same as his. I don't have a clue.
Okay.
No, but I think you want to buy good quality banks, good quality consumption companies. Those are reliable places where you can put long-term money to work. I think those should work out quite well. But again, as Neelkanth mentioned, as Rakesh mentioned, this is a bottom-up company-specific thing. When you ask sectors, that's okay for institutional investors. For retail investors, it's about selecting the right stocks, or otherwise just do.
Depending on you to tell them.
No, but otherwise just do SIP. Best.
Okay.
Yeah, don't worry about it. Every month, put 25-30% of your savings.
Okay, let me put it this way. You expect the Sensex in 1 year to be 32,000. Yeah. What do you expect the mid-cap index to be?
I don't have a forecast for mid-caps, but I think the mid-cap will do much better.
Much better?
Yeah.
Okay, there's that. Yeah. Abhay, same question.
Right, so we are most positive on financials and consumer discretionaries. We actually believe that we are going to see a transformational shift in the financials, for financials, particularly the big transition that will happen from physical to financial savings, and that the conduit of that will be through the banks.
Financials is only private sector, like most of you say?
No, we believe that the time has come to take the risks on public sector banks. Okay. And this is something that we have been highlighting. We think that the risk reward is far more compelling today for the public sector banks. So yes, we like the private sector banks, but in terms of the risk reward, it's beginning to look extremely compelling. So far, this has been one sector that has been shunned, but we think that that's exactly the reason why investors must look at it. Okay. So here, of course, we are going to be very selective in public sector banks. I'm not saying buy the whole space, but selective public sector banks, I think that's the best trade for 2015.
And the other two sectors, you said financials is
so consumer discretionary, okay. And agree with Ridham that the next drivers will emanate from the reforms, particularly the beneficiaries of the GST. So I think logistics, that's going to be one sector that's going to look very attractive. Unfortunately, valuations are beginning to run over there.
Name names?
No names.
Okay.
I'm held back by my compliance.
Yes, I know. The rules have gotten a tad stricter. Ratnesh, same question. What kind of targets are you, have you, given for end of year Sensex and Nifty for 2015?
So the convenient answer is there is no 1 year target that I have which is given out. But if I look at equities per se, whether it's for retail investor or institutional, I think you have to have at least a 2-3 year view. And if I'm looking at next 2-3 years, I'm expecting to have 20% type of a CAGR from the market or portfolio stock, whichever way you look at it.
20% CAGR?
Yes, which will be at least about 15% of earnings growth average, and about balance is a further re-rating, which I expect. So which is a fairly healthy sort of a return. I mean, it may not be even 20% type of a return, but I think next 2 to 3 years, all the factors are aligned to see that kind of a return from the broader market, within which obviously there would be greater upside from some segments.
Okay, and would you also believe that the mid-cap bet would bring more moolah?
It always has, in both on the way up and on the way down. So they have a higher beta, which is natural. So obviously, if my expectation is that broader market gives you 20%, then mid-cap index will give better.
Okay. As Shireen was asking, is there an interval sometime in 2015, post-budget, or after the first quarter earnings, when that inflection doesn't come in the first quarter, or the last quarter of FY15? Is there an interval possible?
If the market has run up, which we believe it will, between now and February, and if the earnings season and the macroeconomy is not seen stabilizing when the fourth quarter numbers are coming out, then there could be a period of indigestion, and that might be the time when India sees its first real correction in 12 months.
Your take, Neelkanth.
I think the lead will come from the global markets. We are right now celebrating the fall in oil. The kind of stresses it creates in economies like Russia, Venezuela, even Brazil, Australia. I think those aren't fully appreciated. So far, the first order effects are more or less priced in, meaning those particular markets have corrected, some particular stocks have corrected, but the interlinkages are not really clear yet. There is some leverage in the system globally, and that can cause disorderly correction in the market. So far, the market is just yawning about these things because every time it corrects, some central bank throws money at it. But I think that will stop working after a while, and so that is when we.
So that could happen as early as
next 3 months,
first half of 2015. We will ring the curtains on this segment. Thank you, Ridham, Ratnesh, Abhay, for giving us those tall targets, and thank you, Neelkanth, for reminding us that interval jaldi bhi aa sakta hai. Thank you.